Never miss an episode of Create, Build, and Manage Daily again. Subscribe to our podcast and listen on the go.
Ken Gee is the founder and managing member of KRI Partners, a real estate syndication and real estate private equity firm with offices in Florida and Ohio. Ken, welcome to the show.
Thanks so much for having me.
Absolutely. Your company specializes in acquiring and managing these multifamily apartments in the South. Ken, there seems to be a huge need and growth for apartments.
There certainly is, especially we primarily operate in Florida, and there's just a massive need for housing there. No question about that.
What's credited to that? I know we have a housing shortage. A lot of people can't seem to buy a house. Is that the main contributing factor?
Yeah, so what's happening in places like Florida and the high growth markets is people are moving there. And so the challenge is that they're able to build new properties that take care of some of the people that move to those jurisdictions or those areas. But most of the people that move there are just ordinary people, just like you and I. And they're not able to build housing affordably to meet the need of the people that are coming there. So that's where we step in. So we'll buy an asset, make it quite a bit nicer than it was, and then rent it to the people that are moving there with considerably nicer property than it was when we started. That's
the secret, and that's how you make your money and get your investment back. So let's talk about that, because when we look at different options that people can invest in, why invest in multi-unit apartments over the single homes or even commercial real estate?
Yeah, so we like multifamily. It's all we've ever done, but we like it because it's most recession resistant, right? When you think about it, the people they're always going to need a place to live. I can't figure out a way to make that need go away. And if it does, well, then we probably got bigger problems that I can solve. So in the commercial real estate market or some of the other things, I can make scenarios. I can make case studies for the demand for those types of assets to go down. Now, when you compare what we do to single family, see, in our world, in order to make the investment worthwhile, we have to be able to buy the asset. We have to be able to improve it. That usually costs a lot of capital. And then after we improve it, we need to be able to rent it for more than what we started, because otherwise it wouldn't make it worthwhile. So our investors benefit by improving those assets, right? Now, if I compare the pricing model to the single family market, there's not necessarily a correlation between what a property is able to generate in terms of income and its value. So it sometimes becomes distorted. Just simply what's happening now with real estate interest rates rising, the demand for that housing is going to go down, and potentially the value. Whereas in the multifamily world, we're still renting apartments, we're still generating cash flow. So the value is far more predictable in the asset class that we buy. So that's why we stick to that.
Well, it makes sense. And also, I mean, just pure volume. If you have so much property, an apartment complex obviously is going to have more land than a single home, but the per door rate, you have a lot more volume. So from that standpoint, it makes more money. And then correct me if I'm wrong, Ken, the way the banks look at it is different as well, because if you do raise the value of that home, you can do that a lot more in an apartment than you can in a single family. You can almost, and I've seen this happen before, and again, you're the expert, so do correct me on this, but you can almost get your money back out if you raise it up and then use that money to invest in another property, right?
That is, yeah, that's a very common business plan in our industry. So there's a couple of things that are probably worth mentioning here. First of all, with a multifamily property, we're able to make investments into the amenity package that you really can't do on a one-off single family home. So when we're done, the whole experience that we bring to the person that lives in our properties, it's elevated to a level that you can't do with a single family home. We have outdoor kitchens and swimming pools and tennis courts and fitness centers. You try to put all that in a single family home, and it becomes incredibly unaffordable. So that's one of the reasons that, again, we stick to this business, because it just makes sense to do that.
It does. And as you look toward the future, Ken, I mean, we know this big boom we have right now. We hear things about inflation and recession. You said this is an inflation proof model on the investing in real estate. What do you see 2023, 2024, as you look toward the future? Is there more opportunities out there?
I think there are. And again, it goes back to people need a place to live. That's probably not going to change anytime soon. So there are tremendous opportunities, especially in the higher growth markets. So you think about where we spend most of our time in central and northern Florida, the reasons that people want to live there probably aren't going to change anytime soon. It's a low tax state. It's a beautiful state to live in. It's a very diverse economy. So those things are going to continue to drive demand. And one of the things that I didn't mention before, when you think about this as an investment, when we talk about cash flow, it usually works out that for every dollar of new cash flow we're able to bring to the property, when the banks look and value that, or when the world goes to value that property, we're able to increase the value of that property by 20 times.
Wow.
So when you think about that, that sort of multiple is really impressive when you talk to investors about trying to help us do what we do.
And I tell you, real estate is always so much easier to predict than the stock market. The website is KRIPartners.com. For those who are watching on BizTV, we got it there on the screen. If you're listening to the radio side or the podcast, it's KRIPartners.com. Got less than 2 minutes left. I want you, Ken, to kind of talk about how you help your clients get into multifamily apartment investment, because someone may be watching tonight and they think, well, that sounds interesting.
Yeah, it is. So prior to the Jobs Act of 2012, it was really hard to even know that these kind of deals or these opportunities exist out there. So when that law passed, we were able to, have this conversation that we're having right now and publicly make the world aware that the opportunity exists to invest with KRI. Our typical minimum investment is $100,000 in one of our funds, but previously, most people wouldn't even know that this opportunity exists. So we take all of that investor capital, put it together right alongside our own capital, and then we go out and buy larger properties, and we're able to do really, really nice things, not only for our investors, but I want to remind you that we're doing something there's a real need here for this housing, and that we're able to provide it. So it's really a win-win, not only for our investors, but for the folks that need a place to live.
I love it. And what I like about the concept is most people can invest in an apartment complex on their own, but for those that have 100,000, they can join you in that. Good stuff, Ken. I appreciate it. You've really kind of shined a light on this industry and given people an idea. So as you look toward 2023 and you're trying to think, man, the stock market seems unstable right now, this is another place you can invest your money. That website, again, is KRIPartners.com, KRIPartners.com. Stick around. This is Create, Build, and Manage Daily.